simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally, and we do that by buying treasury bills. That actually increases the money supply.
Financial Turmoil Explained.
Good morning, ladies and gentlemen, and welcome to today's show on Friday, the 13th of May, 2022. No, I don't think it's anything unusual at all, Friday the 13th. Anyway, so considering the things that are going on, let's put it this way, it doesn't surprise me today's Friday the 13th. What we're going to take a look at is truckers across the United States of America. Where are they going to get their diesel fuel? This is a serious situation. You know, I'm going to tell you what, the lifeblood of America is truckers delivering stuff to the grocery stores on a consistent basis. It's called a just-in-time delivery supply chain. Well, we got a big problem. There's a diesel shortage. It's affecting the east coast of the United States right now. And it could spread, you know, and this depends on how deep this problem is going to get. But we're going to take a look at it real quick on the front side of this show before we do the markets. So let's get the charts open right here. Take a look at what's going on. This is the price shaded in blue right here is the price what diesel's done lately. And now we're going into a shortage. But even if we weren't in a shortage, look at the price of the son of a gun, right? Now the green line is the truckers, you know, they get a price per bid for hauling stuff, you know, basically. And the green line is what they're getting to haul stuff around. I guess it's the, well, they have a name for that or whatever, you know. It's been going down lately. In other words, they're getting less, I guess, for haulage, you know. The spot price for them to haul stuff across the country and stuff, I guess, is going down. At least that's the way I'm reading this chart correctly. That's the NTIL, and it's been going down lately. Now, here's the problem is where these lines converge. Now, what you're seeing here at the start of this chart right here, you're seeing the profit margin. Okay, so the blue line is low diesel prices, and the green line is how much profit there is in hauling stuff around the country with the low diesel prices. And you can see the separation between these two lines is profit. That's a higher, greater profit for the truckers. Well, as we see the diesel price going up, there's less profit. And as we see the other line, the green line going down, there's less profit. And they cross after a while. What that means is much less profit, much less profitable. And everything runs on profit, not just everything in this country. The food you get at your store runs off profit margins. Everything. Nobody's going to do anything if they ain't going to make no money doing it. We're living in a society now where people just they won't work unless they're going to make a profit. It's always profits consideration. Right down to the smallest job somebody's doing, they say, well, how much does it cost you to get to work? And the guy says, well, it's a long drive to work. And he says, well, how much are you making right now? You know, and he says, well, I'm making $14.50 an hour or whatever, you know. And the guy says, and how long does it take you to drive to work and back? And you got to keep your car going and everything else. And they start to think about how much profit he's making at that particular job. And he might think about moving to a different job that's going to give him a better profit ratio. Everything in the system works that way. You know, back in the 1930s when we had the Great Depression, everything in the system did not work that way. People didn't take profit into consideration as much as they do now. Now it's more profit-driven. In other words, what I'm saying is what's iconic in the American lore is the hobo. It started from the Great Depression, and basically you've all seen pictures of a hobo. He's got a little knapsack on a stick, you know, a little bag on the end of a stick over his shoulder, and he's got dirty-looking clothes and stuff, and generally has a dog with him, and it's a picture of the hobo. And they used to ride the rails, you know. So many American folklore songs are sung about them riding the rails, you know, across America. That's because they had to leave the big cities in search of work or in search of food, even, during the Great Depression. and they'd ride the rails out into the country, and they would, like, take a look at the movie, an iconic movie everybody loves, The Wizard of Oz. And in The Wizard of Oz, there's three guys working on the farm. Of course, there's her aunt, Dorothy's aunt, and her uncle there, and they run the farm, but there's three hands, what they call hands, working on the farm. And what are they working for, really? Mostly food. And that's what happened. The hobos would go down the road, and they'd knock on the people's farms, on the door, and they'd say, "Oh, I'm so hungry, I need someplace to eat. Can I sleep in your barn?" And the people back then, they didn't think so much about profit. They just thought, well, this guy's starving to death. Yeah, come on in, and I'll let you work off some food. You can work for tomorrow, and I'll feed you tonight. You can sleep in the barn. And that's what they did back in those days. So a lot of people saved a lot of people's lives back then because there was no food. If you can't believe that that can happen to America again, then you're kidding yourself. And who was responsible for it back then? The Federal Reserve. And who's going to be responsible for it this time? The Federal Reserve. The most evil, vile institution ever created. And they're one thing. They figured out a racket. When they instated the Federal Reserve, they already knew about the racket. You know what the racket is? To create money from nothing. And then to use that money to buy up everything. And in turn, make every citizen a debt slave. And you think I'm joking about that? I'm not joking. Anyway, so what we're seeing here is for truckers, this is going to be utter mayhem. I mean, how do they make any money? We got diesel shortages across the United States. We're going to soon see shortages on almost everything you buy. Empty shelves. And that's when you're going to need stuff. It's going to be a lot of panic buying if this continues. Now, we're just going to have to wait and see just exactly how bad this gets. I'm not one of these guys on my channel. I know some of these other channels out there, you hear them and they're just constantly spieling off doom. This is the end of the world. Oh my gosh, we're all gonna die. And they're running around with their hair on fire on the channels. Well, they're baiting in viewers. My channel here, I'm keeping it real. This is an enormous problem, and we're going to have to wait and see how bad it's going to get, how extensive these diesel shortages will become, and just how the impact is going to be on your day-to-day life where you can't get things you need. So we still got this thing going on over in China where they're locking everybody down, and that's going to affect a lot of other goods that come in from China, things like parts and stuff like that. That also affects the supply chain because machinery breaks down at these factories and stuff. Maybe the factory's got a conveyor belt. And maybe all of a sudden the cogs break on the conveyor belt. And they say, well, we need a new set of cogs. We can't run this conveyor belt here at Amazon. Our conveyor belt just broke down. Well, where are we going to get the cogs? Well, they normally come from China. Well, get on the phone. We'll find out how much it costs for a new set of cogs. And he gets on the phone. Oh, by the way, those cogs, there's a 6-week waiting list. Well, what are we going to do with this conveyor belt? I don't know. Well, we'll have to figure out some other way of doing it. And then by the time they do that, to move the products, that there's going to be a delay on you getting your product on the other end, maybe of 2 weeks or something, longer to wait for your package. Stuff like that's going to happen, right? And your grocery stores and stuff, you're going to see a lot less food in there, a lot less things. We're turning into a third world country, for crying out loud. These people in charge, can't they get it right? I mean, they're messing everything the heck up at hyperspeed. Oh my gosh, I've never seen a country disintegrating so fast into a third world country. And you know who ultimately responsible is the people in charge. What are they doing? Are they insane? I mean, okay, let's get in there and take a look at the silver price today. It's up 32 cents on the day, $20.98. Meanwhile, everything's going up in price, everything's skyrocketed. Silver's getting cheaper and cheaper. Well, let's pave our driveways with silver. When it gets cheap enough. I mean, okay, the price of silver's coming down rapidly. Okay. The price of everything else is going up, including asphalt. Soon asphalt will be more expensive than silver. Something's wrong here, guys. Something's wrong. Something's wrong. Something's crazy. Something don't smell right about all this. And I think they must be getting down awfully close to mining production cost. I think that's the fly in the ointment. I think if they drop that price too much, considering the price of diesel, considering the price of labor and everything else, these mines that mine the stuff are just going to say, hey, we ain't going to mine this stuff out of the ground anymore. Ain't no profit in it for us. Close the mine down, guys, and it'll happen suddenly. As soon as that, like I said, everything runs on profit margin. As soon as that profit margin drops below cost of production, well, what's the point? Maybe they'll stay running a little bit. Maybe they'll just keep the silver for themselves. I don't know. But, this ain't going to work. It just ain't going to work because, like I say, nobody does anything unless they're going to make a profit nowadays. Simple as that. Okay, so it's 2097. I think they still have a very tiny profit margin there, but it ain't much. Considering the price of diesel and considering that I think it's something like 200 pounds of ore to make 1 ounce of silver, or something like 200 pounds of ore has to be crushed. So that's rocks. 200 pounds of rocks, basically a whole wheelbarrow load full of rocks, has to be crushed down to powder. Powder. That's rocks turned into powder. And then that powder has to be run through slurries and stuff like, they put it in, they mix chemicals in and everything else. And this has to be heated and all this kind of stuff. I'm going to tell you, you just can't take 200 pounds of material and turn it into a little coin, and you're only getting 20 bucks? And then there's all the machinery that can break down, and there's no parts to repair it? We're going to run out of silver. And investors want to gobble up all this hundreds of thousands of ounces of silver, and they want to put it away because the financial, this is going to run out. The whole thing's going to run out. And it ain't going to take long, and especially with these prices going down. And what are they going to do then? How are they going to feed industry? How are they going to make the latest cell phones and techs and gadgets without silver? Gold price, 1815, down 650. A cryptocurrency. We're looking at, I better refresh the page. 30,782. So cryptocurrencies bounced back just a little bit. Barely above $30,000. But you know what's happened is, I'll inform you guys what's happening in the markets right now. They've priced in, like the Fed did their first cut, which was 25 basis points. It was basically nothing. It's nothing. The markets didn't react hardly anything to that. But now they did a 50 basis point rate hike. And this reaction you're seeing now is to the 50 basis point rate hike. And they're basically pricing it in. And I've basically told you guys a day or two ago, I said they've pretty much priced it in. They have. There's a little bit of volatility left, but mostly they've priced it in now. Well, the markets are not going to go up significantly as long as the Fed is in this tightening mood. It's just as simple as that. You guys know that what I'm saying is true. You're not going to get a significant increase in the markets as long as the Fed's saying that we're going to do quantitative tightening and we're going to do raise interest rates, and interest rates are going up. Do you really think there's going to be a significant rise in the market when that's going on? No. So what's going to happen is when they do these further rate hikes, the Fed, I think it's in June and July, we're going to see this action start again. This downward action. And as long as the Fed keeps pushing, deciding to do quantitative tightening and all this kind of crap that they're doing, as long as they keep this up, we're going to see this downward trend continue and get worse. Meanwhile, companies are moving closer and closer to Chapter 11. Bankruptcy. Out there, because they all run on credit. And credit is contracting now. And so this is why we have the danger of a credit freeze. An extreme danger. As we move into later this summer, we got an extreme danger for a credit freeze. A sudden contraction in the system. It's like the system goes into a convulsion. It's like I'm a doctor, and I'm looking at the patient and I'm saying, you got an extreme danger of having some sort of a seizure. So you got a brain tumor or whatever, you're going to have a seizure from that. And that's what I'm watching with the system here. I'm saying, I see the problem and what it's going to cause. It's going to cause a contraction in the system later on, unless the Fed backs off. Unless they back the heck off. They got no sign of backing off. They're all the more for the charge right now. They're all in there. They want to get this done. We want to get inflation taken care of and everything, and we're going to fight inflation and everything. They're not backing off. So you're going to see your contraction, and probably sometime before the end of the year. And it's not going to be pretty. And that's going to back them off. When they get the contraction, it's going to be an event like 2008, except magnitudes larger. It's going to scare the you-know-what out of them. It's going to scare them so bad they've never been scared before, like they've been scared when that contraction hits. It's going to hit suddenly, and it's going to be probably going to freeze lines of credit within the system. And that's when they're going to back off suddenly, because they're going to realize that what they've caused is worse than what they're trying to fight. It's as simple as that. I mean, that should be a no-brainer for people out there, but for some reason people they got goggles on or something. They have a hard time seeing it. That's what's coming. And it's going to take them a bit by surprise, Not here on this channel. You guys watching this channel, you got a heads up for watching for that later this year. And you're probably going to see what's leading up to it. And that's going to lead to a sudden change after that happens and the Fed backs off. And that change is going to be monumental for the price of gold, silver, and cryptos at that point in time. That's going to be like when the floodgates of money are released, because the problem that they generate is going to cost them an awful lot to fix. I'm going to estimate it's going to cost them in the trillions to repair it. And, at this point, if they start printing trillions of dollars again, what's going to happen to inflation? Okay, so I think you guys got it. Anyway, it's going to be bad. Oh, bad stuff coming down the pike. Oh, my goodness. Dow Jones today, 32,216. It's up 486 points. But this is to be expected, this little bounce back. This doesn't mean that the downward action's over. This just means that nothing goes down in a straight line, including the markets. We take a look at this is a 5-year chart, and here is the decline. And you can see right now at this point, they're not too concerned, because it hasn't even got the magnitude, only about half the magnitude of what happened at the beginning of the pandemic that they did react to. But this gives you a clue about when they're going to react, You got to get a steep fall like happened at the beginning of the pandemic, and then they reacted with, what was it called, the CARES packages or whatever. You remember the big stimmy checks in the mail? And that's what forced it all the way up to where it is now. And so we've seen about half of that decline right now. Pretty much right on half. And so we're probably going to see an equivalent of, so we're probably looking at somewhere between 20 and 25,000 on the Dow before they really react. But for the next little while, until the next interest rate hike, until the next interest rate hike of 50 basis points, it might be 75 basis points or 50, we're going to just kind of go along here around 32,000. And then when the next one comes, that's when we're probably going to drop down to 30,000 or below, And then the next one comes after that, that's when we're going to start to drop down to the 20s. That's basically the way it's going to work. And when are they going to react? I'm just giving it a guess, probably somewhere between 22,000 and 25,000, probably somewhere down in there. Around here, they're probably going to say, oh, this is too much for us. We're out, and then they get the credit contraction on top of that, and they're just like, oh, panicking, to get everything to go back up again. And there's only one way. Money. Lots and lots and lots and lots of printing. That's the only way they're going to get to go back up again. And, I heard somebody out there say, in my audience, say, well, what if they just let her go? They don't do nothing. They just let her go. And they could. I mean, that's their option. They can do that. So we have to consider it. What if? So these people out here are holding cash. They're saying, oh, my goodness, my cash would be worth a fortune if they just let her go, because everything will deflate. Won't be any cash around. And everybody will be selling everything for pennies on the dollar. I've heard this mantra over and over again. And they think, oh, I'm going to win big because I'm sitting on a big pile of cash. There's a problem with your logic with that, and I'll explain to you what it is. Yes, they could just let her go, and this whole thing could completely deflate. And yes, there would be a little short period of time possibly where you could buy things cheap on the cheap. But, and this is a big but, the system would completely lock up in that case, Dollars would completely disappear from the system to where the system couldn't function, because there wouldn't be enough dollars out there to make it function. Dollars is like the oil that keeps the machine running. There wouldn't be any oil. What happens to a big engine if you have no oil in it? It seizes up. That's what happens. So the system would seize up and lock up. And then the dollars would basically be a default on all the U.S. debt and everything. It would just basically, the system would just implode on itself, and dollars wouldn't function anymore. I see in that kind of a situation them switching over to real money instantaneously by default. And I'm talking about real money. I'm talking about God's money, instantaneously by default. And so then it would probably still, in other words, what I'm saying is, either way it goes, hyperinflation or that deflationary default on the system, which is very unlikely the deflationary one, because that's just not what they're going to do, because that they lose power when they do that, and they don't want to lose power. They want to continue having power. And how do they have power? By paying off everybody and keeping the system oiled with money, but the money's worth less and less and less. That way they gain. That's a hidden tax. Of course, that's what they want. It's a hidden tax. They want to tax you to death. They want to tax you until you got nothing left. That's what they're going to do. And so, either way, gold and silver's a winner, big winner, the way I see it. Anyway, and you know what? They're putting it on one super sale right now. Oh my goodness! And I talked about this in the past. I've said that this is a time when the big money's going to swoop in at a certain point, when it gets down to a certain point. And they all know what point that is because they're controlling the price. It's a rigged system. Anyway, let's move on. Take a look at oil. Man, they are just, use the word, I could use a derogatory word to describe what they're doing to us. Left and right, they're doing it to us. $109 for crude oil. And the pumps, I mean, this price for crude oil's been $109 for quite a little while now. In fact, I think it was up to 111 or whatever. Okay, it's been roving around this price for a little while now. If we go back, let's take a look how long. We go back 6 months here. Yeah, you see, here, it was $123 there on March 8th. And it's been roving around this price. Can you see? More or less. Find the median price would be around $107. That's your median price, So it's been staying steady at this price. What I notice is, down in the United States, the price was like $3.15 for gas. Okay? All along in here, when the price they were paying for crude oil was $123, the price in the United States for gas was about $3.15. Well, how come right now the price isn't any higher? It's no higher. What they're paying for barrel of oil is no higher right now. And the price is what, $4 and something or $5? They're price gouging you. Can't you see it? They're gouging you. They're gouging. Probably this whole diesel shortage is probably all artificial as well. They're gougers. There's what we have is basically the whole system is just one big criminal organization now at this point. And they're taking advantage of the people left and right. They are just messing you over so bad, the people out there. I mean, I might as well laugh as cry. Ain't nothing I can do about it, but just point it out and say, hey, you know what? We are being taken advantage of to the extreme. And what can we do about it? Nothing, except laugh. Okay, yeah, open your wallet up to them, let them take it all. And what are we going to eat after we got no money left? Because, I mean, pity us at this point. Okay, bonds move index today. I know I'm kind of dragging today a little bit. I'm taking a lot of my time on this, but $118 for the move index, and you can see it just slowly sliding up, but it's down a little bit today, but over the year, just take a look at it over the year, and you see which direction it's moving in. And that's heading toward this credit freeze. 104.64 for the dollar index. Oh, we got to do bonds and rates. And we see them climbing today. U.S. 10-year at 2.9 and the U.S. 30-year at 3.06. Okay, guys, this has been your market report. I got one or two more shows I want to do over there on my, before I get everybody, to many people as I can, to join up with my Patreon channel. I got a couple more shows I want to produce over there. Basically, my Patreon channel is called the same thing that I got here, Financial Turmoil Explained. That's what it's called over there at Patreon. And I got a couple more shows I want to do over there before I start to get people to... and I'm going to be doing a couple shows there every week, and they're a different kind of show than here. They're a longer show, and they are audio. They're an audio show. They're a... what do they call that? They have a name for that. I can't think of it. It's on the tip of my tongue right now. When you do an audio blog, it's like an audio show. It's like a 40-minute long audio show, 30-minute long audio show. And I cut loose a bit, and I'm going to be doing them shows over there consistently, probably more than one a week. And what it's going to be is I figure it this way. If I can get 300 subscribers over there to... this is the way I'm thinking in my mind. If I can get 300 subscribers over there, I'm going to keep the price at just $2 a month. And I mean, that's only $100 buys you 4 years over there at Patreon, on my Patreon channel, at that price. If I can keep it at that price, that's what I want to do. But I'm going to need about 300 subscribers over there to keep it at that price. Now, if I only get like 200 subscribers, then I'm going to raise the price to $3. But if I get less than 100 subscribers, I'm going to have to raise the price to $5. I don't want to do that, so I need a lot of you to come over there when the time comes. Now, not just yet, but start coming over there when I start getting more shows over there. I'm starting to produce some now. I produced the first one yesterday, and I'm going to keep producing them. Probably a couple shows every week, But they're, like I say, they're a long audio show, podcast. That's what it's called, a podcast, Anyway, catch you guys later. You guys have a great afternoon. Bye-bye.